Hello guys, this is Brombo and I'm back with another quick video. And today I want us to talk about what we call an ID50. And I know for some of you, you might be wondering what an ID50 is, but this is the best trade you can ever trade in the market. So an ID50 in general, it's called the first pullback to the 50 EMA, all right, from the peak. So I'll show you two scenarios about an ID50. There's several ways this can appear on the charts, but it is very important because it can appear anywhere, whether be it stocks, be it foreign currencies, or be it volatilities. So pay attention. And an ID50, what you need first is to identify, as the definition says, the peak. Identify the peak first, identify the 50 EMA, then you will see the first pullback. So you're working in reverse. That's how you trade the ID50. Pay attention to this because you're gonna trade this type of trade. You're gonna use this even as your entry, and it's gonna help you so much. You're gonna make money off it because it never disappoints. All right. Now, how then do we find an ID50? If you look at the picture that I have open right here, I can already see one ID50 on this chart. I'm gonna zoom it a little bit. So what you have here is a peak formation. Now, this can happen in any time frame. So remember, any time frame. I know some of you might be wondering now, why am I saying that is a peak? A peak can happen in any time frame. It can be a 15 minutes, a 5 minutes, a 1 hour, a 4 hour, any kind of time frame. Same applies with an ID50. It can happen on any time frame. So this being your peak, where do you want to take this trade? You take this trade at the first pullback to the 50 EMA. In this case, this is where price made a peak formation, pulled away, and then pulled back to the 50 EMA and then traded away. So imagine how much of a move you are going to catch just by trading an ID50. All right. Now let's go to the 15 minutes time frame and see if we can find another example. This is the example we're dealing with, but we need a different one. All right. Pull my chart and let's see if we can get another ID50 close by. So anywhere where you see the market form a peak formation, you want to see an ID50. And a peak formation, we are not talking about those H1 peak levels, peak formation, because remember on 15 minutes, just this can be a peak formation on its own, and then the market goes and resets. So anything, it can be the high of the day, it can be the low of the day, it can be the high of the week, the low of the week. They are all peak formations. All right. Now, this is a peak formation there, and then the market trades away from that peak formation. So I'll show you a W. All right. Market trades away, market pulls back to the 50, and then market goes away. This is the trade you are going to catch just by catching the 50 ID50 on the 15 minutes. All right, let's go to a different pair. I'll pick any pair. Maybe I'll pick AUD/USD, and let's see if we can find the ID50. This time around, we want to go to the 4-hour time frame. I see one already here, but I want to show you an easy one so that you can appreciate how an ID50 looks like. Here's another one right here. You've got a peak formation, and what you have next, peak formation, all right, and soon after the peak formation, you have trade away, trade into the 50, and then trade away. This is the move that you are gonna catch just by trading the ID50. All right, guys, this, I may not call it a holy grail, but I can guarantee you this is the best thing you can ever have in your trading setup. I can see all these ID50s here, but I want to show you clean ones, all right, so that you can appreciate what kind of ID50 we're talking about, all right? So anything can be an ID50, but I'm trying to show you only clean ones, all right? This again here is also an ID50, but really didn't come too close to the 50 EMA, but it is an ID50 nonetheless. This is an ID50, and we also have another ID50 here. I'm going to show you in a second. Peak formation, pull back, pull to the 50, and then go down. Peak formation, pull back, pull away, and then pull back and pull away. So this right here is your whole move. This right here is your whole move. That is how you can trade an ID50. All right, let's pick another pair and see if we can find the same thing. Let's find maybe pairs that are not USD pairs. Maybe let's do Euro UNZD. Where were we? We're on the 4 hour. Now, before we go there, there is another ID50 there as well. That is on the 1 hour. Sorry about that. That is on the 1 hour time frame. All right, you've got your peak formation, you've got the market forming a triple bottom there, pull away, pull to the 50, and pull away. This whole move is your ID50. All right, so you can actually trade an ID50 and forget about catching a peak formation and whatnot, because it's gonna be hard for you. But you can actually catch an ID50 because an ID50 is still part of level 3. All right, it is still part of level 3, so you can actually catch it and forget about anything else. I'm seeing ID50s there, but I only want to concentrate on the clean ones. All right, we've got another one right here as well. Peak formation. All right, peak formation, pull away, pull to the 50, and drop. So this whole move right here is your peak formation. All right, we are seeing this all on the 1 hour. Now let's pick another pair and probably go to D1. All right, I'll just pick a random pair, or maybe gold for those who love gold. Let's see if we can find it on gold. Okay, gold. Let's see if we can find it on gold. It's there, right there. All right, it might not be too close, but it is there. You have another one here as well. Peak formation, M formation, drop, and that's your ID50 there. The first pullback to the 50 EMA, and then you drop. First pullback to the 50 EMA. Even after taking that entry, you realize the market will never come for your stop loss. It just trades away. This is on D1, guys. Imagine how much money you can make just by trading the ID50. There's another one right there. And I'm just being selective because I want to focus more on clear ones, the ones that you can actually look to them and say, oh yeah, I can relate with that. All right, peak formation, pull up, and then pull back to the 50 and pull up. This is D1, guys. Imagine how much you could have made. And I promise you, if you go to the to the smaller time frame, be it H4 or H1, I guess, either of those two, that there is also an ID50. So you can actually take it from the 4 hour or 1 hour, and then you see another one from D1 and actually take another one there as well. It can happen on all time frames as the price go. It can happen on one of them, on two of them, on three of them. It always happens, guys. All you need first is to identify the peak formation. After the peak formation, then you can look for the first pullback to the 50 EMA. Let's find another one. We go to W1. Here's W1, guys. W1, peak formation, pull away, pull to the 50 and drop. Imagine how much you can make just by trading 50 pullback, the ID50. Make this your favorite trade. All right, make this your favorite trade. Now, I want to explain something very important. Let's go to the whiteboard. Okay, so now that you have seen examples of ID50s, now I want to show you the safest ID50 that you can trade. Number one, there are those that form a peak and then pull to the 50 and pull away. That's the normal kind of ID50. Now there's an ID50 that forms a peak, a neck, forms that, and then respect the high and then go up. All right. There are some that form like this, respect the high, give you a 15 minutes ID50 and then give you a 1 hour and then push up. There are some that will form like this and then just stand there for a while and go up. And there are some that will do the exact same thing on what I've shown you on this one, but the difference is that they will stay there but below the neckline and go up. There are different variations, they're even more than what I'm showing you. But a safe ID50, all right? A safe ID50 is one that sorry about that. Right. A safe ID50 is one that will, number one, close above previous high or low. Now it doesn't mean the other ones they don't work. They work. All right. Close above or previous, close above previous high or low. Or we want those that stay longer on the 50 EMA. All right. And now by longer, this can be subjective. It can depend on either what time, it depends on the time frame that you're working on. At least maybe if you have 3 candles in that area, then you can say, oh yeah, this one stayed a bit longer. What do I mean? All right, let's put our EMA in this case. Now, we've got our 50 EMA. Here it is moving right there, all right? On this one, we've got the 50 EMA moving there, and then on H1, we've got the 50 EMA moving there. So don't confuse it. This is H1, this is M15. I'm showing you this one so that you understand that it doesn't happen only on one time frame. Then you've got this one where it does this, and then you've got this one where it does this. All right. So the kind of ID50 that you are looking for, all right, is something like this. So this one, I do not trade it myself, all right? Reason being, it respected the high of the neck and then went down and gave us an ID50. Now, the reason why I don't trade it is because the market can even decide to come down and give you another leg, or rather continue as a reset. So I do not trade that kind of ID50 because I did not see the dealer break the high and close above it. I do not care how many candles close above it. It can be 1, it can be 2, it can be 3, but as long as a candle broke the high and closed above it, that's the kind of ID50 that I call safe. But if that does not happen, then there's a possibility the market might push down. That is why when I gave you step index yesterday, I told you not to go on with it because they respected the high. We've got this one right here, whereby now it depends with the time frame that you're working on. So this one respects the high and then gives you a 15 minutes ID50 and then breaks that high, all right? And then starts to work out the 1 hour ID50. Now that is my kind of ID50. That is the one that I can comfortably take because I have seen the neckline high being taken out. All right. Now let's go on to this scenario. So I said there are thousands and thousands of scenarios that you will get. Now this one, it did break the high. Now the nice thing about it, it didn't move too far away from the neck, which is still okay. But I can see there's a candle that closed above the high. And then on top of that, it decides to stay there for a little while. Now that is my kind of ID50 because the more they stay on that 50 EMA there, the more chances of it having a bigger move, all right? Same applies with this one right here. It breaks the high, then comes back to the 50 and stays for a little while. Now a little while can be at least 3 candles around that area. If I can see 3 candles, then I'm quite sure this is the kind of trade that I want to trade. So I want to encourage you, trade only the ID50 and you'll see how much your trading will improve. Every time you get on the chart, even if there's a peak formation or whatever, just wait for that ID50 and you'll see how amazing your results are going to be. In as much as you might lose some trades, but I guarantee you this will change the way you trade. All right. Now, I'll say it again. These are not the only options that you have. There are so many options that can appear, but this I do not trade. I do not trade the 15 minutes unless they form a peak on the 15, they form that, and then they come there, and then they give me that ID50 there. Now, because I can clearly see a W on the 15 minutes, I know they broke the high there. So I can take that ID50, hoping that high will be broken as we move up. All right. That is the only way I can take it. But as long as it's a V type of a thing whereby there's not even a W on the 15 minutes like what was on step index and the market just rallies up to that leg, that kind I will not take. I hope guys you understand. Now let's go back to the charts and see a few examples again. All right, we are back on the chart. Now we want to examine what we were talking about. This is the weekly time frame of Euro USD. Now we want to look at those examples again and see if this was safe or not. All right. Now looking at this is your peak formation. All right. Peak formation. Remember guys. And then this is where your neck is right here. All right. Now, was I going to trade this? Definitely not, because the neckline is not broken yet. Where was I going to take my entry? Right there, because the neckline has been broken. Do you see that, guys? And then again, the market stayed there for a few days because these are weekly candles. If we were to go to the daily time frame of this pair, you'd see that the market stayed there for a while. All right. Now here we are, guys. Now this is all changed. Remember, there is also an ID50 here. If you go to lower time frames, you'll find it. There's another one there. You can actually start from there and trade from there all the way down. But here I'm just showing you in case you did not see that on the peak formation, but you're now seeing it later on. All right. So now again, let's say you haven't seen all this, you have seen all this, but you missed it and you are now here. All right, there is your neckline getting broken right there. Okay, so that means if it was broken here, I wasn't gonna take this one, but I was gonna take this one. Now let's count how many candles do we have in that spot. All right, I'll try and zoom so we can see them together. All right, now if you look at that spot there, you'll find you have candle number 1, candle number 2, candle number 3, and then you also have the candle number 4 also working there. Now this is a daily time frame, so what it means is you have 1, 2, 3.5 days the market sitting in the same spot. I can guarantee you there is a peak formation here on the 1 hour, which was actually an ID50 on D1. So that is all that you needed, and then you could trade away from it. So this is a kind of entry that you can actually look for and utilize, and it will give you good results, guys. Let's look at this one right here. I'm just picking them randomly. All right, now remember what I said, peak formation. Now look what happens here. The dealer goes up and then comes back down because he's not breaking the 50 line. All right, comes back down. Now on a smaller time frame like the 1 hour 15 minutes, I can guarantee you this is an ID50. This is an ID50, and that's a break of that neckline. That's an ID50. You can actually take it from there. But let's say you did not see that. You did not see that. Now look at what happens. A break there, and then the market rallies up. The market rallies up after breaking, and then the market comes back down, and then the market goes away. Now let's try and count how many candles we have there. We have 1, sorry about that. We have 1, we have 2, and then we have 0.5. Why do I say 0.5? It's because that's the shift candle that moved away from that area. That is why I'm calling it 0.5, just to mean that it only stayed half the time. All right, but you've got 2.5 candles there, so that means that is an ideal kind of an ID50. That's the one that you want. Now let me show you an ID50 that you cannot trade. Let's try and find it and see. All right. I don't know if I can get it from the 1 hour, but let's try and look for it. Okay. I know it's gonna be hard to find something that is wrong, because everything that I see here, it's the right stuff. Everything that I see is the right stuff. All right, I've got another one that I did not trade last week. Okay, now look at this. The market forms a reset. All right, market forms a reset, and you have the high right there. All right, or you can mark it here. It doesn't matter, wherever you want to mark it, as long as it's not taken out. Now what happens is, this is your peak formation low. All right, the market does not take out the high, but instead comes down to the ID50 and pushes up high. So I cannot take that kind of an ID50, but the kind I will take is the one where he comes back, because he's broken that high, he comes back, then I can trade it. Why? Because I love to trade on the 4 hour and the 1 hour. I don't really like to be going to the 15 minutes. Yes, I do view the 15 minutes. Definitely I view it, but I do not like to, stay too much on smaller time frames, because smaller time frames are just impulses that can happen for a short period of time, and then from there the market reverses on you or what. So I love to view things from the 1 hour, because I know that is where you can get your proper entry. All right, now looking at it from the 15 minutes time frame, this is what you have. You've got your peak there. Oh, sorry about that. All right, you've got your peak there. There you go. And then the market pushes up. The market instead breaks that. I don't know what's going on with my pen. All right, the market breaks that high and then trades away and then comes back to the ID50. All right, the market comes back to the ID50. So that's the kind of ID50 that I can trade from a smaller time frame and then target either the high, which is the neck, or anything above that. So that's what I'm looking for. All right, if I take the trade here, I'm targeting the high of that bigger W, because I do not know whether that's going to be respected or not. So that's where my TP is going to be. Or I can leave a runner and see if we break out of that area. If we do, then happy days. All right, then I wait for the 1 hour ID50. So there can be a scenario where the market gives you a peak, gives you a 15 minutes ID50, 1 hour ID50, 4 hour ID50, D1 ID50, W1 ID50, monthly ID50. You see, you're starting all the way from your smallest peak on M15, even the M5 as well. Then you get your M15 here, your H1, H4, D1, W1, and monthly time frame. That is how you can trade an ID50. This is a game changer, guys, and please make sure you go and back test it, and please make sure you trade this kind of trade. Share this with everyone. This is the best kind of trade you can trade and the best kind of entry that you can take in the market. Do not miss it, because it's very powerful and it's going to help you minimize the losses that you make in the market. Thank you very much, guys, and hopefully you learned something.